If you're self-employed and interested in getting a home loan this year, there are a few things you should know. My name is Kelly Zitlow, and I've been a residential lender for over 26 years. I've done thousands of home loans. Many of them have been for self-employed borrowers. And my best piece of advice is work with an experienced lender. I cannot stress this enough. Self-employed loans are not typical. They require strategy and someone who really knows their stuff and the lending guidelines. So here's what you're going to need. Depending on the loan program, you're going to need to provide 1 to 2 years filed tax returns. And these are going to be the most recent filed tax returns. And depending on where you are in the year with regard to when your last tax return was filed, you may have to provide a year-to-date P&L to make up for the previous year if you've not filed your tax return yet. And as a reminder, a P&L stands for a profit and loss statement. Now, there are some situations, depending on how the business is structured, that you might also have to provide a balance sheet for those same time frames. The other thing that the lending guidelines require are 3 months of the business bank statements. And this is really important because what the guidelines are requiring is that the lender determine and review, are your recent deposits going into that business bank statement, do they support the income that you reported on your last filed tax return and your P&L? Because what lenders are worried about and what they're looking for is your income declining? And this is really important because our country has just recently been through a major economic issue with regard to the pandemic. But over time, there are things that happen to self-employed borrowers depending on the year and what's going on in the global universe here. And because of that, you will see lending guidelines change in response to the economic environment. So no, today, this is what's required. This could change next month or next year. So working with an experienced lender and really understanding based on the loan type that you are applying for and based on your particular structure as a self-employed borrower, what exactly is going to be needed, and then the review process that the lender is going to go through with that information. There may be more hoops to jump through as a self-employed borrower, but the good news is if you can meet the lending requirements, you can still obtain a home loan. The lending requirements are going to vary based on the loan type. Let's talk about one of the most important qualifications, which really is what the lender's looking for here, and that is how to determine the usable income that still meets the lending guidelines based on how you're filing your income for your business. So what income do lenders look at to qualify? Well, it's really going to be based on how the business is structured. So the most common type of business that we see is for a sole proprietorship, and that's where the business owner is actually filing a Schedule C on their personal tax return. Now, in this scenario, it's really important to know that it's not gross receipts that the lender's going to use to derive income. The lender's going to take your gross receipts minus your deductions, and really they're going to be looking at line 31 on that Schedule C. And here's the deal. If it's a negative, then there's no usable income for the home loan, at least not on that business. Now, there are some other things that lenders can add back in based on that Schedule C, but overall, that's kind of the approach. So if we're talking with a client that is new to us and they're self-employed, one of the first things we're asking them to do is, can you pull out your most recent filed tax return and let's take a peek at line 31. And depending on what they're telling us on line 31, that will help us kind of drive where we go from there. But as you can see, so many different moving pieces come into play depending on the type of business and structure. So on that note, remember that based on how you're filing your income taxes and based on the business structure, that's really what's going to drive what the lender is going to need from you. So for example, I have a client right now who was recently referred over to us, and some of the early on questions we're asking is if they have ownership in a company in which they would own 25% or more of that company. And in his mind, his response was, it doesn't matter because I get a W-2. Well, it does matter because in his situation, he's the 100% owner of an S corporation that pays him the W-2. So from a lending standpoint, he is going to fall under our self-employment income guidelines. And again, that's not just ours. That's going to be the lending guidelines no matter which lender that he's using. So then we have to get into those guidelines based on the loan type, and then we're going to have to gather all of the information based on that business structure. So again, when you're self-employed, lots of moving pieces. And it's really important to talk to somebody that understands what you're saying when you start to walk through your business structure, how you're filing taxes, etc., and then ultimately what your goal is so that they can back into the documentation that's going to be needed from you. I can't stress enough, working with an experienced lender is going to be key in helping you get to the finish line with your home loan. People are getting self-employment loans every day, so don't lose hope. Just know there's going to be a few extra hoops. If you haven't already done so, please subscribe to this channel. I have a true passion for home loan education. I want to make sure you have the facts and education you need to make an informed buying decision. So please subscribe. In the meantime, if you have questions, comment below. And until next time, take care.